So let's say I'm a subscriber of yours, and maybe
Yep.
a new subscriber. What's the best way for me to engage so that I can maximize the benefit I get from your service?
So Motley Fool Stock Advisor is our starter service. That's the vast majority of our members are subscribed to Motley Fool Stock Advisor. And what we're doing there is my brother and I are each picking a stock a month. And so we're thinking about the next 3+ years. So if you were to join this month, you're going to see my latest, freshest, newest favorite pick,
All right.
my brother Tom's. You'll be able to look up and down and see all stocks we've ever picked since we launched in March of 2002. So you can see our records. You're going to see we've beaten the market very substantially in a world where it's often assumed or taught that you can't beat the stock market. It would just be luck.
Right.
For some reason, I've happened into the one professional discipline where everybody thinks that it would just be luck to be better than average. People don't think that about NBA players. They don't think that about doctors or lawyers. But for some reason, picking stocks, well, that would just be you're coming against monkeys and you have no shot throwing darts against the wall, right? So I don't believe that. I've never believed that. I think that you are rewarded. You definitely can beat the market. We've demonstrated that. So you'd see that in Stock Advisor. And then we would want you to get your feet wet. We'd suggest that you buy one or both of those stocks. And then next month, when we come out with our next picks, we'd suggest you do it again and make a regular habit of saving every 2 weeks, investing every month. And I'd hope that you could go from 0 stocks, if that's where you were, to 15 stocks.
Right.
As quickly as possible so that you have a nice base, a portfolio. And from there, you could keep adding or just add to those 15. You could add more. There's a lot of ways to play it. But what you're doing there, 2 things. You are investing regularly.
Right.
You're not sweating the market or worried or waiting because you hear it might crash. Every single month, you're dollar cost averaging into our picks. And number 2, you're going to start experiencing the positive vibe of success. Because, again, 10% on average is the gain made by this thing year in and year out. In 2 years, every 3, you're winning, and it beats everything else, especially over time. So I think you're going to start feeling those positive vibes, and you're going to want to save more at that point. You're going to start saying, honey, let's save even more because look. And in fact, you'll be rewarded for that over time.
So structurally, it'd be a matter of saying, okay, so I would subscribe. I'd set up some kind of a trading account.
Yes. Yeah, you would definitely want to open up a brokerage account, which these days is very easy to do online. There are things like Schwab and E-Trade, and you see them all advertising, and they're all pretty good.
Yep.
But yes, you definitely need to have an account, and that's not much more than when you opened up a bank account as a high school kid. You probably wrote a check to deposit that first amount of money. You do the same thing with a brokerage account. Of course, a lot of people have 401k accounts and retirement plans, IRAs, where they can invest sometimes stocks directly there. So a lot of people use that.
And I think a part of this, which is maybe the psychological part, this human psychodynamic, is saying, well, once you have a structure, then you start to have the discipline to fund, as a process, saying, hey, we have a certain amount of income coming in, and we're going to allocate. And
that's right.
And doing it with you, because just hearing you talk about it being in in the glow of what this environment is here, it seems like fun as compared to drudgery. And I think that's a part a lot of people say this is too abstract and mystical for me, and it seems very boring. I don't want to get involved. But somehow you guys keep people engaged through humor and through fun.
Well, I appreciate that, and because I don't want us to take too much credit for it. I think it is among the most fun and positive things that you can do, whether or not the Motley Fool ever told you to do that or not. Right. The act of becoming a part owner of companies that you admire, companies whose products you love. A lot of people love Apple. It's been a pretty good stock over the last 10 or 20 years, right? It's now the largest public company in the world.
The first $1 trillion company.
That's right, and it's been tremendously successful. And a lot of people, the reason it's so successful is because they love the product. And so for anybody who ever bought an iPhone, I'd say, did you think about also spending that same $200 saving additionally buying some Apple stock? Because that iPhone's going to depreciate, and you're going to have to buy the next one. But the Apple stock, that appreciates. So to go away from the stock market briefly, a lot of people buy that first car, and they don't realize that's going to be a depreciating asset. It's maybe not the best way to spend your money. If instead you'd spent that money with a $30,000 stock purchase, and you play that forward 10, 15 years, you start to see the power of not buying cars new that often. So I think it should be fun. I think it is fun. I love the companies I'm invested in. I'm fascinated by Intuitive Surgical, which is bringing surgical robots and improving outcomes for people, or Netflix, which is the way I've spent a lot of hours. These are companies I love. So I think this should be by nature fun. And maybe a lot of people like fantasy football. I like fantasy stock ball. I think that we should have the same fun that people have with watching sports with our stocks.
You know, and it's interesting. It's so often over the years, my mother had when we were having to have traffic directed to go into a Whole Foods, when it first came out in our town, she's like, "You ought to go buy that stock, Home Depot. You ought to buy it," because she's just these crowds. And back then, of course, I was smarter. I went and I looked and I said, "Well, it looks like all the growth is priced in already." Blah blah blah. That's when Whole Foods was up like 20 or something, And so my mom actually was a much better stock picker than I was.
I appreciate that.
But I think that's the point. Is what you're saying is that if you're a consumer of something that you have a passion about, that's probably a good stock to be in. Given some other considerations, but that's one way to look at it.
Absolutely. In fact, that's the truest way of looking at it. The reason that the stock market exists is so that people like you and me can take part ownership in the companies themselves. They take in our money and it allows them to grow their business,
right.
But we become part owners. And so it's amazing that every day you have access to thousands of companies that you and I could right now become a part owner of. And then the only question is, A, do I have the money? Am I saving? Am I saving 10% of my salary every 2 weeks? I hope so.
Yep.
And then B, okay, which one out of this kid in a candy store, farmer's market here, which booth do we want to go up to? We're not going to be buying fruits and vegetables. We're actually going to be buying Hasbro or Disney or Under Armour. And why would we buy this one over that one? And which is going to be the best one? And if you're a gamer and I'm a gamer, I'm not even an investor. I'm really just a gamer who happens to invest. If you're a gamer, this is like the greatest game of all, is asking, what's going to beat the market? What's going to be the best? What's going to be the next Apple? That's one thing we do every day at the Motley Fool. And over the last 25 years, we've gotten it right some of the times, and it's tremendously fun when you do.